even if gold were to go down here, I wouldn't expect it to go any lower than 27 and then return, but I'm exceedingly bullish. There are so many factors combined driving gold higher that I've revised my end of the year first quarter target now to 28.65 based on the fabric of geopolitical concerns and the technical aspect being a extended fifth wave, which is why I've updated from our earlier call, which was about 2,800.
Gary Wagner, editor of the Gold Forecast, recently shared his updated outlook on the gold and silver markets, highlighting key drivers behind their recent movements. Initially, Wagner had forecasted gold to reach $2,700, but due to the evolving global landscape, he has revised his end-of-year and first quarter 2024 target to $2,865. This revision reflects a blend of technical factors and mounting geopolitical concerns. While Wagner anticipates minor corrections along the way, he does not expect gold to dip below $2,700 before continuing its upward trajectory. The gold market has shown considerable strength, rallying notably during early trading hours on Tuesday. Several key factors propel gold, including geopolitical risks and falling interest rates. Momentum has grown, and investors are increasingly drawn to gold as a safe haven. Adding to the bullish sentiment, central banks worldwide have increased their gold reserves, further fueling the metal's ascent. Technically, Wagner points to forming a bullish flag, which signals a measured move toward $2,800. The surge in gold prices, up by 40% since last year, has been driven by rising inflation, escalating geopolitical tensions, and deepening concerns over U.S. debt. According to Wagner, this robust trend is expected to persist, even though periodic price fluctuations are likely. Traditional price drivers such as the U.S. dollar and interest rate expectations no longer fully explain gold's recent strength. Instead, Wagner cites geopolitical tensions in the Middle East, particularly the conflict between Israel and Iran, as key influences. Moreover, uncertainty ahead of the upcoming U.S. elections has added another layer of support to the precious metal. Market sentiment toward gold remains positive, with investors increasingly seeking protection against potential economic instability. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
The first chart to illustrate that point, and let me pull it into a full screen mode, is a weekly Henkin-Ashi chart. It differs from a standard candlestick chart in that the open is fixed from the midpoint of the prior session. So on a weekly chart, it'd be the prior week. It averages out or smooths out the noise. In a dynamic trend like we're witnessing is solid, long, continuous blocks of large green candles. And that's what we've seen. The rectangle really marks the beginning of October last year. That's when we had gold trading just below 1900. We've seen it surge 40% from all of the reasons you just spoke about. And then there's a little issue in Taiwan going on also that could be interesting down the road with Chinese activity in the seas there. But what I want to say is this. I firmly believe in terms of where gold will go, it is going to be significantly higher. There will be peaks and troughs, obviously, but from this chart, that trend is strong. And that's the point that I want to make. And this is a standard candlestick chart. So in terms of really what we're looking at today, it's all about the dollar. You've got the dollar gaining significantly. Any of the losses we're seeing in gold are directly attributable to dollar strength. And that brings me to our basic forecasts and the primary chart that I typically use for my study. And as you said, yes, we were looking for gold to touch 2,700. That was precisely what we did. And this was at what we're calling a long primary third wave. A shallow correction we predicted could go to either 2635 or 2590. it took the easier path and only broke to 2635. And then we've steamrolled now past 2700. Record breaking day Friday, followed by, whether it's consolidation today, it's just dollar strength. So when I define the path to getting to where I believe this rally will terminate, I have updated our numbers. And it's based on the fact that I believe fully that we are in a final fifth wave. It's a primary wave. And there will be a series of rallies, waves 1, 3, and 5, interrupted by basic corrective periods or sideways trading action. Even if gold were to go down here, I wouldn't expect it to go any lower than 27 and then return. But I'm exceedingly bullish. There are so many factors combined driving gold higher that I've revised my end of the year first quarter target now to 2865 based on the fabric of geopolitical concerns and the technical aspect being a extended fifth wave, which is why I've updated from our earlier call, which was about 2,800.
According to FX Street data, silver prices continued their upward momentum on Tuesday, reaching $34.21 per ounce. This marks a 1.22% increase from Monday's price of $33.79. Since the beginning of the year, silver has surged by an impressive 43.75%, reflecting growing investor demand for the metal. GaryWagner says silver has surpassed all major resistance levels since April 2013. For technical analysts, breaking through this critical zone paves the way for further gains, with Wagner noting that the market now faces clear skies. This suggests silver is positioned for significant upside potential, with key price targets set at $41 by the end of 2024 and $42 in the first quarter of 2025. The recent price surge was strengthened by a decisive breakout above the horizontal resistance level at $32.50, drawn from the May 21st high on a daily time frame. Adding to the bullish outlook, the upward sloping 20 and 50-day exponential moving averages, currently near $30.70 and $31.70 respectively, indicate further upward momentum. With geopolitical tensions, inflation concerns, and a favorable technical setup all driving silver's rally, the metal remains a compelling investment choice for those seeking safe haven assets and inflation hedges. As silver continues its ascent, analysts are closely watching for further milestones, reinforcing its growing appeal in volatile markets. Let's get back to the interview.
When we look at the chart on the screen, each candle represents 2 weeks. So we're looking at an extremely long-term view. We're looking at the point in time when we saw silver above $50. That's when gold first hit 1900. This long line down to the end of 2015-16 is the correction that occurred with silver, and in gold was sitting at about 1,020 right in this period. And when you look at what happened recently, it ran out of steam. And so we were getting points, even when gold was making all-time fresh highs, silver couldn't get out of its way. The breakout on Friday, I believe 6.5%, took us right to this area just above $33. Now, to a market technician, when you look at the areas it has surpassed all of the major areas of potential resistance up to April 2013. And you've got a good amount of history with showing that this area taken out will really energize this market, and the potential for silver, in my eyes, by the end of the year, $41. End of this year, first quarter, $42. That's a huge change from what I was looking at even 2 weeks ago. We hit a major milestone when we broke above this technical level last week. And that's key, because look at, it's taken everything out. And so it's kind of like clear skies out there, and there's plenty of room for silver to run. Absolutely. Well, what I'm saying is the price that we are currently at is a key and critical point. The breakout took us right to this area. Incremental moves above this, say 34, 35, really signals that there's not major resistance till $40, $41. It's just not there. And there's been so much energy building up in silver because it hasn't moved. It has not kept up with gold. Why that happened is a mystery. I'm not going to attempt to even postulate an answer, but what I can say is on a technical basis, the breakout that happened last week is significant and should give silver the ability to quickly and possibly parabolically move to $40 per ounce.
Both gold and silver have demonstrated strong upward momentum, driven by geopolitical tensions, inflation concerns, and solid technical setups. With gold targeting new highs and silver breaking through key resistance levels, these precious metals are increasingly considered reliable safe haven assets in uncertain times. As we move closer to the end of the year, do you believe these metals will maintain their current trajectory or face potential corrections? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.